Hi there, this is Alvin from Dr. Wealth. Not sure whether you've been monitoring the Singapore stock market. It has been pretty hot this year. I know it has underperformed for many years. Some investors may have sort of given up on the Singapore stock market. But before you do so, please watch this video and that might change your mind. Okay, so STI or the Straits Times Index has hit a 5-year high. That is excluding dividends. If you include dividends, the returns will even be higher, right? Because Singapore stocks are known to be giving generous dividends, and later we'll take a look, right, at some of these performances of the individual stocks. Okay, but for STI, it is at a 5-year high. Achieved this year. Actually, it's even 6 or 7-year high. It's approaching its 10-year high, and I think that it might even be able to break that 10-year high in this year alone. So what could be the reason that's driving this STI uptrend? If we take a look at the Southeast Asian markets, the stock market in this part of Asia has actually done well this year. Okay, if we just zoom into just the past 1 month performance, Singapore remains the best performing one, with STI delivering 9.59%, right, just 1 month alone. And even Thailand is not shabby at 9.35%, Indonesia at 7.54%, Philippines at 5.75%, Vietnam, Malaysia at 2+%. And actually, Malaysia has done well this year. The year-to-date performance is actually higher than Singapore. It's just that in the past 1 month, Singapore stocks have outperformed the Southeast Asian peers, as seen in this slide itself. And if we zoom in into the STI component, okay, let me just blow this up for you. You can see the best performing stock is SETS, okay, with a 22.8% return, and Singapore Exchange at 20.4%. Okay, later I have a dedicated chart for you to see how much the Singapore Exchange stock has actually gone up in the past 1 month. Okay, we see a handful of REITs, right? And we also see a laggard Singapore Telecommunication, which is Singtel in short, has also gone up 15.8% in the past 1 month. And we have one bank, DBS, up 11.5%. Other than that, we can see that it's pretty much REIT dominant. Other than REITs, actually many of them are laggards, which means their stock performance have not been doing well for the past, say, 5 years. But somehow, this past 1 month, you can see their share price surge a lot. And this is the SGX stock price. You can see from 9 plus, right? It has been hovering below $10 for the longest time. And once it breaks that $10 mark, now it's at $11 over dollars. Okay, so you can see that very steep uptrend in the past 1 month alone. And I believe that this has something to do with the Equities Market Review Committee, right? So this was published or announced on 2nd August this year, where MAS have set up a review group to strengthen the equities market, right? Because there has been a lot of complaints or unhappiness about Singapore stock performance, and now the government or authority has stepped in and tried to address this issue, right? Trying to set up a review group to see what can be done to boost the local stock market. And they even put a minister in charge of this review committee. So it appears to be very serious about this, right? And you have a minister heading this, okay? Never before has a minister paid attention to the Singapore stock market. So I believe that some investors see this as a good sign, because Singapore at the end of the day is a very top-down kind of planning economy, right? And if the government interest in supporting the stock market, I think investors, some of them at least, start to see that, hey, maybe there is a big change that's coming. Maybe there is opportunity to invest in the Singapore stock market. So I do think that this could be one of the catalysts or one of the drivers of Singapore stock performance in the past 1 month. So to give you a bit more illustration, we can see this is the STI chart. If we take a look at since 2nd August, okay, the performance 2nd August till the time of recording, which is 12 September, midday, and you can see that the STI price have gone up 6.4%, right? And from the August low, because August there was a correction for global stock market, and from the August low is up 12%. Okay, and it's pretty relentless even in September, even though the US stock market had some pullback, but Singapore stock market has not seen a pullback as of now. So it's pretty resilient, and this run has been pretty strong. Okay, so I do attribute to part of the drivers of returns coming from the review committee or the announcement itself, right? That the government is going to do something about it. And if we take a look at the STI metrics, okay, it is not expensive. If you take a look at the dividend yield, it's still at like 4.43%. Okay, for an index, 4.43% is very unheard of, even when you look at the rest of the world. And moreover, this is tax-free because there's no dividend taxation in Singapore from an individual investor perspective. Right, PE is at 12.78. Doesn't look as high as say 15 or 16 on average, right? So overall, I would say that even despite this uptrend in the Singapore stock market, Singapore stocks are not expensive. Okay, that may suggest opportunity is not over yet, right? May have more legs to run. And if we look at beyond the STI components, beyond the top 30 stocks in Singapore, even the small caps, okay, are running. Okay, so this is really a broad market recovery rather than very specific to just a group of stocks, not the banks only. So you can see small caps like Nam Cheong, WeHer, Silver Lake, Axis, MoneyMax, all these have gone up more than 10%, more than 30% actually in the past 1 month. So this rally is pretty much broad-based, as I mentioned, okay, and that's a good sign, right? Because we do want to see that there is strength overall throughout the entire stock market. And the next group that definitely we need to address is the REITs. REITs have not been performing well with the rate hikes in the past 2 years, but now with the pending interest rate cuts, REITs have been skyrocketing, REITs have been recovering, and it's pricing in some of this rate cut anticipation that is coming in 18 September, right, where Federal Reserve is having a meeting. And the best performing REIT in the past 1 month has been Manulife US REIT, and the second one is Capital Pacific Oak US REIT. Both are up more than 20%, right? And Elite UK REIT is also up more than 20%. Okay, so you can see this is a list of REITs that have gone up more than 10% in the past 1 month. That's like maybe about what, 10 over of them, about most 20 of them. And that shows you strong performance, and there's no like uniqueness or any patterns within them. Is really a broad recovery. It can be commercial, it can be office, it can be retail, it can be industrial, it can have a lot of variety of these REITs that are performing. So I do think that this is not by chance, and this is really a response to the interest rate cuts that's happening. And this is the yield curve, just to give you a sense, okay? Compared to a month ago or 6 months ago, the 10-year Singapore bond yield has already dropped below 3%. Okay, and of course the short-term end is still pretty high at more than 3%, but I don't think this is going to last. Okay, and well, with interest rate lowering, that means that there could be potentially more investors trying to seek higher yields in the market, and therefore they may start to look at the REITs or dividend stocks that's listed in Singapore. So to make their money work harder and generate higher returns at the end of the day. So this interest rate lowering is actually good for Singapore stocks, being more dividend oriented kind of equity market across the world. And the Singapore stocks have also started to see more inflows, right? So this is reported by SGX in August. REIT ETF has reached historical AUM heights with rising trading volumes. So the buying has already begun, and therefore the REITs prices have been well supported and seeing that bull run. And we also see the institutions and individual investor were net buyers of Singapore stock in August. Okay, so this trend may continue, right? Given that the interest rate may fall further. Okay, so T-bills, money market fund, fixed deposit currently are still above 3%, but I think in due time, in the next few months, we may see these rates go below 3%, and investors will start to think about, okay, what should I do with my money? And stocks may be one of the considerations. And second is we talk about the review committee. So there may be policy support coming from the government. And most importantly, in dollars term, the Singapore government, if they could pump in money to support the stock market in Singapore, that would definitely be more welcome. And lastly, Singapore stocks have underperformed for many years, and actually the fundamentals are not bad. Fundamentals have been improving, but the share price just refused to move, right? So with this change, so with this positive influx of capital, we can see that share price are starting to move, and yet I believe that they are still undervalued, and there may be some more opportunities to look at the Singapore stock market. So let me know, what do you think, right? Have you been investing in Singapore stocks or looking to invest in Singapore stocks? Leave your comments below. Do remember to like the video and subscribe to the channel, and I'll see you in the next one. Goodbye.